Good morning, everybody. Welcome to the Flow Show, Tuesday, the 7th of October. And here we are looking at some decent market moves going on, particularly in the yen. It recovered its dip yesterday, taking out the prior highs and going on to new highs. We'll take a look at that in a moment and the news behind it. Morning, Kay. Welcome back.
Morning, mate. Morning, mate. Yeah, just for a couple of days, but happy to be back. Hope everybody is doing fine.
According to the unions,
Yeah, all good, all good. You haven't missed much action, I should say. But yeah, here we are. Right, let's start off in Japan. Yesterday we had Takeichi's one of her advisors, Honda, saying that she wants the BOJ to proceed cautiously on rates. That's a little less inflammatory from some of her prior comments on the BOJ. He also said that dollar yen going through 150 is a bit too much. So a bit of a warning there that those moves are seen as a bit excessive, although it's got no influence over that. In the meantime, Takeichi is slowly putting together her cabinet, although the important role has yet to be decided, i.e. the finance minister. So that's the one that the market is really waiting for. She's also doing the rounds with speaking to various other parties, sorting out coalitions and whatnot. She's spoken with Komito and said that they discussed 3 points. She had agreement on 2, and we'll keep talking with them over the other point. But there's no date set for that. There are also some will they, won't they talks with the DPP leader Tamaki, who has come out and said that the Bank of Japan is to monitor data and judge policy appropriately. So it doesn't look like Takeichi is going to find a fan in Tamaki in terms of maybe getting the BOJ to slow down or not be as hawkish as they are. That meeting is potentially going to happen at some point. Takeichi herself is talking about the US, says she's truly hoping to work together with Trump to make our alliance even stronger and more prosperous. Now, it did feel a bit like Ishiba didn't have the best relationship with Trump, but so far the noises from both sides seem to be positive regarding both those speaking to each other. So we'll see how that relationship develops. That will be fairly important. The LDP is apparently looking to delay this extraordinary Diet session that was planned for the 15th, which is pretty much procedural in getting Ishiba out and getting Takeichi in. They might boot that to the 17th of October, according to Asahi News. A bit of data from Japan as well. We had some spending numbers, pretty good as well. Household spending up 0.6% in August. Month on month, year on year, up a healthy 2.3%. So some good numbers for Japan again. We've also had our first verbal warning, a low DEFCON level warning from Finance Minister Kato, who's still in his role. Says that FX should reflect fundamentals, avoid excessive moves. We'll watch closely for any excessive moves in FX. He's refraining from commenting specifically on market moves. Key for FX to move stably while reflecting fundamentals, blah, blah, blah. The same old low-level lines, but the eyeballs are on the screens. Fear not. Ueda was supposed to be appearing in Paris at an event on Wednesday. He's not now after that whole event got cancelled. So this isn't anything to do with Japanese politics, more likely to do with the mess that's going on in France. As I say, that whole event was cancelled in France. And just while the market's getting a bit antsy over what's going on in Japan, there was a 30-year bond auction, which went over pretty well. Bid to cover was much higher, 3.41 versus 3.31 previously. So that sent a bit of a calming, soothing tone into the markets over there. So with no real step forward, yen is still weakening, particularly against dollar yen. Kay, I don't know how much you caught of all that sort of stuff. What are your initial thoughts about it all?
Yeah, I did. We have to keep up with everything that's going on. Yeah, the thing, it's between Komeito. They are they're not very happy with the let's say hardliner approach of Takeichi, especially that Yakusino shrine, or what the name is again. Visit and prayers is one thing. The DPFP, they may have a better a better eye on that than Komeito. But also, yeah, we can't forget that that Democratic Party for the People, DPP, DPFP, how you want to name it, they're also for fiscal expansion. So it would be a relatively easy partner for Takeichi to put Abe version 2 in place, easier than with Komeito, I reckon. So, but and you're right as well. The relationship between Takaichi is probably going to be a little easier with the US than the one that Ishiba and before that Kishiba had. So, yeah, I still think a lot of our program is centered around really fiscal expansion, and that's what the market is looking at and trading for the moment. I don't know if we will get a lot of fight back against that anytime soon, and at least not before the 15th of October, right?
Yeah, 15th or 17th, whatever it is. Yeah, which, as I say, should be just a procedural thing. But you never say never with these things. Now, what we have heard, or supposedly the word on the street, is that a lot of this big move that we saw, this gap, was the market getting caught on the hop, but also hedge funds squaring up yen longs, apparently in a rush. And also, we're seeing the return of the carry trade, with the thinking that all this will mean that the BOJ perhaps look to pause on their hikes until things become clearer. I don't. Well, we know that the Bank of Japan like to be cautious at the best of times, and they'll be looking at this situation. But I don't think they're going to be pushed into delaying too long if the data holds up. But they may still be waiting to find out what the economic pledges and policies are going to be from Takaichi. I think calls about the carry trade reopening are probably going to be a bit wide of the mark, because the Fed's going to be cutting and the Bank of Japan is still going to be raising. So it's a narrowing door. Kay, what are your thoughts on that?
Well, has the carry trade ever been away? Apart from one or two big blips that we saw, or big setbacks in it, has it ever been away? Uh, I don't know where those people want to make a story out of the carry trade, but as we've seen over the past months, really, I think Mrs. Watanabe, at least from their side. Her Mrs. Watanabe's sons and nephews have already been on it, buying Aussie yen and potentially dollar yen, etc., etc. And we've also been saying for months on end that being long yen, unless you do it versus something like Swiss franc, is always going to cost you money. So I'm um, I'm a bit skeptical about that article saying the carry trade is back. It's never been away for more than a month or two. That's my view about it. As I've always been saying as well, I can't really trade yen long. Okay, you've got like those shorter term blips, but in the longer run, and I've been saying it for weeks, even not months, that the yen crosses were always still bid. So I do think a part of the market has just been continuing doing carry trades.
Yeah. We did see a bit of a washout, when the Fed announced, or when it became clear the Fed were going to start cutting rates.
Yeah.
There was a bit of a washout. But yeah, I think half these stories are just square pegs in round holes, personally. And well, anyway, we'll just trade what the price does, not what other people think it's going to be doing. Right, moving on. We had a bit of data out this morning. Germany making good use of all that 500 billion spending they've got, burning holes in their pockets. Factory orders down 0.8%. Were expected to rise 1.2%. These guys really can't get off the ground at the moment. Everyone's waiting to see when that spending is going to kick in. The year-on-year number for that came in at 1.5 versus 3.1 expected in a prior negative 3.3%. ECB's Escriva says ECB rates are adequate as we're currently at target. The Spanish economy is solid in the third quarter. Spain has been doing reasonably well. ECB's Lagarde was speaking in front of her bosses in the Parliament, says the disinflationary process is over. The euro area has held up well amid all the uncertainty. We're still anticipating growth in the second half of the year, but weaker than in the first half. It says we need bold reforms to make the euro a global anchor of trust. It says the ECB does not target the FX rate, but is watching the impact on prices. Over in France, the political mess gets worse. France's Le Maire has resigned from the new government, literally, again, hours after being appointed defence minister. There is a real shit show going on over there at the moment. Another one of the reasons why the euro is a bit under the cosh. Moving over to the US, Fed's Schmid says policy is slightly restrictive, but there's inflation risks persisting. Inflation remains too high and price increases are becoming more widespread. It says monetary policy is judged as appropriately calibrated and only slightly restrictive, and he's seeing a pause in labour market conditions. So one of the less dovish members of the FOMC over there. Trump, he's come back with the tariffs on heavy and medium duty trucks. That's going to be kicking off in the 1st of November. These were the ones that got punted from the 1st of October, and then all the car industries were up in arms. So he went off and did deals and whatnot. So anyway, 25% is going to be slapped on 1st of November. Likely another taco trade in there somewhere. White House Press Secretary Leavitt says if there is no shutdown deal this week, a lot of pain will be inflicted. There was another attempt last night to pass something, which failed. So we drag on and on and on again. And we'll see if something gives maybe this week or whenever. But the clock is ticking. We're going to be scrabbling around for data again today. We were due some trade data. We won't get that. So we're going to have to focus on the Red Book, which is an old measure of retail sales. And then we've got the Ivy PMI, as Mark in our chat room pointed out, and the IBD TIP Economic Optimism Index. All these exciting numbers we're going to be getting. We might get, I won't get that because that's the Conference Board employment trends. Won't get that. So lacking data yet again. We just have to look at these little numbers. But unfortunately, or fortunately, depending on your point of view, we do still get Fed heads speaking. So we've got Bowman, Kashkari and Bostic, among whoever else decides to pop up and grace us with their presence. So apart from that, another quiet day on the data front. Kay, do we've got any pickings?
Yeah, so a shutdown doesn't mean a shut up for the Fed governors, right?
No, unfortunately.
No. Yeah, or we could concentrate on the New Zealand milk auctions. That's been a mover in the Flintstones times. Yeah, there's very little to hang on to. It's all about more issues than resolving problems, it seems, in the market. So France is in the doldrums again, or still. It's I'm starting to think they may sooner or later have to go to the voting stations. They're not getting their act together over there. It's I think Macron should perhaps sooner rather than later make a decision. So I'm not ruling that one out at all. On the US shutdown, there was kind of a bit of hopium when Trump said they may want to go sit around the table, but then it got a bit quashed when he said that it's again the Democrats who will have to give in. So I'm not sure whether they are seeing an opening or not to end the shutdown anytime soon. So we're basically trading problems, and it's not the easiest one to trade, I would say, for us. Although we have seen a bit of a better dollar, but it's really concentrated in euro and the yen really right now. The one that's holding up pretty well is the sterling for the moment. Is that because the issues are only to come in November? That's a possibility. But that's the one that's holding up pretty well. And of course, the metals, they're getting a push in their back from anything that's going on right now, because it is all about issues and problems and not finding solutions right now.
Yeah, and politics, politics, politics.
Yeah.
Yeah, France has picked up the baton from the UK for 5 minutes while that mess happens, but we're not going to be far from a UK miss or mess. As I just popped in the chat room earlier, there's a little piece of news. It's not market move or anything, but 16 Conservative councillors have defected to Reform. So a bit like what we're seeing in a lot of other countries. We're moving from a two-party political landscape to maybe a more stronger three-party political landscape, which likely means more political malaise and indecision and uncertainty. But yeah, that was some pretty significant news in terms of just the landscape here in the UK. It's something we're going to keep an eye on. But yeah, I'm sure Reeves is going to do something to get the spotlight of attention back on her at some point from France, and they'll pass the baton back. But yeah, you're right about the French thing. And I've been saying it yesterday. Macron is under more and more pressure
Yeah.
to pull an election. I don't think he can hold on. He can hold out for much longer in terms of that, and that could end up doing France a favour because if they do manage to get someone manages to get a majority position and can form a government and pass a budget, then we will probably see the euro doing a bit of recovery and France can get on with its life. But yeah, no one seems to want to do anything over there at the moment. Right, so not much coming up today. We'll look at some of the prices. Yeah, Fred, I put this in the room earlier. I mentioned it on the show yesterday. This is a fairly significant area up here, 151s, 158s. We're into it right now. It was a pretty significant high back in August. It goes back further than that. It goes back quite a few years, this level up here. We've had action around it previously over the last couple of years, but it goes back way, way, way beyond that as well. So yes, it's a bit of a significant level up here. But as we know, this is a big political situation that's going on. It's got the market's attention. Market isn't going to give a monkeys about coloured lines on a chart. So if you want to be playing against this level, you can do by all means, but you need to keep it fairly low risk, and you don't need to be too wrong to before you lose money, or you don't lose an awful lot of money. So if we're breaking above this and holding above this 151 area, it really is the gateway maybe for 152s or even more, depending on how far the market wants to push this. I wanted to ask Kate, we knew Takeichi was going to be the most bearish for the yen, but is this a little bit overdone? I mean, we're talking politics. Yes, she's going to be more fiscally easing on that front, but does the move really match the potential outcome? Is she going to be more bark than bite when she's in the hot seat?
Being such a big fan of Abe, I was actually reading stuff about her this morning again, because she was really his biggest fan, and she even pushed him to step up to get a third term, which he did not in the end, because he was struggling a bit with his health at the time. But yeah, so I don't think it's going to be more bark than bite, but as we know, markets tend to trade in waves, right? So now we have this confirmation wave past the election that Takaichi gets it. But as you said at the start of the show, she did not yet confirm the what's really is going to be the plan. I think it's going to be very interesting. And that may actually see another wave develop of yen selling before we have to consider what's going to happen with the Ministry of Finance as well, where interventions, etc. But without thinking about interventions, if she would get in ship with that Democratic Party for the People, that would confirm that fiscal expansion, and then I think the yen would get another slap on the head. Now it could be that she decides to try and glue the pieces together with Komeito. Then she would be having to look at maybe another party to find support all the time, because we know that LDP and Komeito together even don't have the overall majority, so they're always going to need the help from other parties to vote stuff through in the diet. But if she goes in with the PFP, it could be that there's a couple of other parties there who would always give the support to push things through, and that means more fiscal laxism, and I guess will weigh more on the Japanese yen.
Yeah, and she's also mentioned, potentially changing the accord with the BOJ. Now, I think she's referring to that 2013 agreement they cobbled together, and I read it last night, and it's not exactly. I can't see where she's going to make changes there to make it more dovish than the thing already reads. I mean, it already talks about the BOJ easing as necessary to get Japan out of deflation and promote the economy. So I don't know exactly how much she could change in that to, as I say, make it more dovish
No.
than it already is.
No, but she could use it to keep Bank of Japan on that leash. Anyway, I mean, we've spoken about it so often. I mean, from day one when Ueda arrived, they reiterated that cooperation between the government and the Bank of Japan and the MOF then on the government side. It's what more can you do? The thing is to um, get her more directly around the table. Like, for instance, instead of having a government representative sitting down with the MOF and the Bank of Japan regularly, as we know they do, if she herself goes there, that would be a bit of a message sent, right? Because that would mean that she really wants to keep Bank of Japan on a tight leash. Read not raising rates that often. And as a matter of fact, I read this morning some commentators already thinking that the next hike would only come in Q1 2026 for the Bank of Japan. But yeah, I mean, it's all those kind of things that we need to now monitor. What is the real decision that is going to be made? Because she won't do 180. I mean, you can't negate your own election program, right?
Yeah,
She can't do 180, but she can say stuff that maybe puts the market more on the thought of, oh, okay, she's still, Ueda has explained the thing correctly, and expressed the need for going towards a more, let's say, neutral stance in the monetary policy than an easing bias, because they're still somewhere on an easing bias, right? So that may be when if those changes come, then we may see another move. I'm not saying July, August last year, or over the turn of the year um, ahead of Trump's inauguration, or so, or when the Fed was cutting rates. I don't think that right now this is on the cards unless something bad happens to the dollar, but that won't be yen driven then in that case, right? But for be yen driven, we need to see some really changes from her side rather than from somebody else's side.
Yeah. Right. So one warning I'm going to give is that we've got a shift, okay, in price risk now, because before she came in, we all thought the BOJ is on the road to hiking rates again. Yen was just sitting in the good old range, and we expected limited reaction if they did hike rates. Now I think the picture's slipped because we're seeing all this yen weakness. If the Bank of Japan decide, well, we don't need to worry about politics, we think we've got enough data to hike on, that is probably now going to see a bigger reaction than what it would have done a week or two ago. So just factor that in. If we get nearer the end of October, start getting some sources pieces dropping, we could see a big reaction, positive reaction in the end. So yen pairs coming down. Just you need to know that there's a potential for that risk now in the pricing as things have changed. Oh, see, I'm talking too much.
While you're on the dollar yen there, it's really, as you already mentioned, an interesting level. But there's some additional factors making this in an interesting zone. Is that if you just draw a line from that March high over the August high, we arrive here as well. And then as I put on the right there, you take the high there, and then this line also comes in right here. And then if you look at the weekly chart on the clouds, the high of the cloud, Ishimoku cloud, and we know that the Japanese are really avid watchers of this. You look where that top is. It's right here as well. So this is an important level for dollar yen.
Yeah, look, it's oh, I'll move my lines. It's quite interesting that top of that cloud was also significant back here as well.
Mm-hmm.
So
Look
yeah,
at even prior bottom top. It's always had some action. So this is one because and I'm just going to give this here for free. I mean, a lot of people are looking at hourly clouds or whatever clouds don't. I mean, the Japanese they don't look at short-term clouds. They're in the best they go is maybe down to the 4 hours. But usually clouds are used on a daily or longer term charts in for the Japanese watchers at least.
Yeah, well said, mate. So yeah, keep an eye on that. It is a significant level. I was perhaps half interested in giving it a go, but I don't know. I might have a little nibble. I can always do a little tight one. I did manage to sort of break even the shorts I did yesterday. I didn't like that rally at all, so I tightened up my stop late last night. So yeah, I'm probably down a little bit on costs, and that's about it. But better than losing, I can say that for sure. Right, let's tick off that for a moment. Right, elsewhere we've got euro dollar, euro. Even somewhat in euro yen, it's holding back a bit, but we've got the euro dollar not looking overly good. We're on a bit of a level down here, 60, 70. We've got those prior lows to take into consideration, but it is definitely looking very droopy at the moment. 116, 30s is a bit of a level down below, and then we'll hit the figure and this area, 115, 70-ish, which has seen a bit of action going back earlier this year. I still make the point, you can just see all the way down here is a 38.2 of the year's rally. So, this is nothing at the moment. But, there's still plenty of pip movements going on here. We're still some 300 plus, or just under 300 off the highs. So we have had a decent move and it can keep moving. I think if the politics drags us down to 115, I'll be a little bit interested down there, but also depending on what is going on in the States. Just going to have a quick look at yields as well on the old 10-year, because we are continuing just to creep up towards that 420 level. Kate, this shutdown stuff, it's not been as dollar negative as some may have thought initially. I still think it's on the clock. The longer it goes, the more it will be negative. But the dollar's still holding in there pretty much.
Fully agree. I completely agree. That's what we said from the start. Yes, there will be a bit of an impact, and maybe we saw it in the run up too, which was helped by a bit of month-end, quarter-end flows that we finally got to see in some form towards the end of the month. But now you're seeing like you have those problems in France. You have Japan, which is a weakening yen story. It does seem like, well, and as we said, I mean, it's going to have a negative impact the longer it lasts, this shutdown. But then you look on the side from FX, there you have the expression of, you see gold rallying, metals rallying. That is more the expression of the market now to trade the shutdown while it lasts, and then we will see for how long. And if it lasts for longer than acceptable by markets, then you will probably see the dollar at some stage catch up. And then I'm thinking about if you look at stuff like euro sterling now being a bit offered, maybe cable is the one that's going to rally. I'm still thinking about stuff like the Aussie potentially catching a bit versus dollar if it lasts for much longer than we think. Because for now, if you take into account obviously the French situation, but also if it would be resolved, because we had that little thing, Trump saying, oh, maybe I'm getting involved and we're trying to find a solution. Imagine that they open again before the end of the week. I can see the dollar catching a bit of a bid, because the market will remind itself about the data that we had before the shutdown, which were, let's face it, not showing any sharp drop off in the US, right? Yeah, we had the employment numbers, but all the rest of the data is still not of the likes, and we had that higher GDP revision, still not of the likes of showing that the US is completely dropping off the cliff. Okay, that maybe then filter through if we get a quick resolution. But the longer it drags on, the more I think the risk is there that all of a sudden we see a bit of weakness creeping in the dollar. But I would say choose your dollar wisely.
Yeah. I think it's going to be a bit of a snowball thing. You know, if we go through this week, no resolution, the market might start getting a bit antsy. Go through another week, it will grow. I think if we break the last record, i.e. Trump's last shutdown record, that's when I think the market will start thinking, okay, this is going to potentially drag out. So yeah, it's going to happen in varying degrees. Take it week by week. Each week that passes, the more the market might start trading it a bit more. Right, one quick one to look at before I pass it over to Kay. Euro sterling. Again, this is a bit under the cost due to what's going on in Europe. We are knocking around the top of this zone. Bounces are looking pretty weak, up towards that 87 level. 86.90s as well. So while we're staying here, there is a possibility, if there's further bad news, that we're going to see a push down. If I do see a push down to the 86 figure, I'm just going to load up again, add back some of the stuff I've cut, look to offload it in rallies while keeping a core long, because of the UK stuff that is the reason I've been trading this one for quite some time anyway. So yeah, I'm looking at this as a potential opportunity if we get a move down to the low 86s again, or even better if we can get it. Right, mate, I'm going to pass it over to you.
Just want to quickly show there this Aussie dollar that I'm talking about, and I don't have the position. I actually don't have positions running because I'm not going to be around too much until next week. So, but this one I think is one of those, and I still haven't given up on it. And compared to the Kiwis, I would say it would still have a bit more because will be a bit more attention, and it's a slightly bigger market than the Kiwi as well. Although we have seen Aussie Kiwi come down from the highs. Yeah, we're struggling here, but all the dollar pairs are doing a bit better. So this one also is coming down. But I think that the longer it lasts, I would like to see if we get down here around 65 three quarters, which is not far, but especially around 65 and a half. I would like to see how it behaves around there on the Aussie dollar and get a bit more about. Okay, unless they completely fully reopen today, and then maybe the dollar will catch a better beat. But the longer it lasts, if we get down there, this is still one of the pairs where I would not be surprised if we start to find demand in Aussie dollar, for instance, because I still think it's one of those that could do a bit better. But then those two, well, all the metals are still very, very, very big, and now another bit coming in because of the French situation. It's just still the perfect hedging gold against everything that's going wrong elsewhere, and it's still going there. Yeah, there's this extension here at 39.82, but really, but that's the only thing we can really bank on is to find the next level. The next level is going to be well above 4,000. Yeah, the market will likely see this 4,000 as a bit of psychological level, but how will it react if it gets there? I mean, could be that we fly through it straight away because everybody has taken their profit, and then all of a sudden it runs through. But it is, if you assume that this has been in a bit of a channel, it is a potential target of the channel right now, around 4,000. We will see this afternoon when the US comes in, because it's always an interesting watch, obviously, lately, what the states are doing with their own dollar based on shutdowns, etc. But really, I mean, there's still nothing, unless you really want to. It's just casino playing, right? To try and find the top. We tried it here. Yes, you could trade it once after the top, but then when it flew through, it just added another $100 to the party. So it's still a bit of useless play unless you want to say like, okay, I want to play the 4,000, and then I'm going to put a stop at 4,000 and a quarter or so. But nothing tells me here that people trying to play the short side will not get stopped out. It's been a bit of a perfect one if you look at how it lasts. We really are going to have to see reversals in all things that can go wrong, like political resolutions, and especially then I would say in geopolitics, where wars, etc., are still raging across certain areas, and when that will be resolved, or when we will have an outlook for decent resolutions, then we will be able to start to look at some levels under which bigger retracements could occur. We had one of those last week on silver. All of a sudden, the bid dropped away. Yeah, all of a sudden the bid dropped away. But again, as I said before, we have seen these kind of moves. So even the last ones since since September, really, we're again in this move higher. So we have to go back onto the real long term to see. Oh, I have to fit it to the screen. Remember that high was just shy of the $50 mark. Okay, we are extremely close, and I would say perhaps too close not to go and test it and even go through. It is kind of the same situation as gold, and add to silver now that it's used to produce a lot of things, even the bad ones. Okay, so as I said already a few times, so we could be in for another rally, unless we see something's changing in the market. And already now, we are just continuing to build support. So already now, the support will be around 47.20, where it was just above 45 before. Now it's already 47.20. If we start to get those kind of setbacks and hold, this is one, and then we started to move higher again. We need to see one, another one, and another one, and then we can start to dream about bigger corrections, which will then maybe take us back to lower levels. But for as long as we don't see those successive moves down, I don't think there's still there's yet a case for this to start correcting more, basically. And I'm not needing to show more. I saw your Euro Swiss AD. Yeah, that's a nice one you traded there. There's been a confirmation that SNB may have been at work. In the month of September after August as well. The FX reserves are showing pretty increased in their numbers, so there may have been a bit of involvement there from the SNB. So we need to watch it out. But then when you look where we are now in Euro Swiss especially, which is the biggest barometer for Swiss strength or weakness, it's still trading around the lows because of what's happening in Europe. It's not really yet ready to reverse higher. So for the time being, in Euro Swiss at least, I don't see what's going to drive the thing higher for now. Sterling Swiss. Joao, what are you looking at in Sterling Swiss? You open and close this trade almost 5 times. Sorry, Ludi. Sterling Swiss, Joao, what are you looking at in Sterling Swiss? Are you looking to go long, short? Longs. Well, you need it to hold in a very short term above 107.35.50, but then ideally you need a close above 107.5 and then start to push, okay? But you need a close above this, because otherwise it's going, yeah, it's turning in kind of a triangle or wedgie or something like that. Yeah, I don't really know about this kind of picture. If you look at it from the longer term, it doesn't look great, does it? But yeah, I mean, if sterling continues to do okay, because it does pretty much okay right now, why not? But therefore we are going to have to build bases as well in that Euro Swiss, around 93, 92, 3/4 perhaps. On the dollar CAD, I have not been trading CAD for quite a while, but
I can tell you it's not in a rush to go anywhere.
yeah, and it's this is on the daily, right? It's bid, and this thing is bid, right? For as long as we are above 139.15, 25, it's pretty bid to me on just to start the week, and that's potential for a test through 140. That's how it looks to me, unless you start to close under this 139. Oh, even 139 the figure, right? Unless you start to close below 139 the figure, then it looks still a bit on the bid side, potential to test higher levels. Yeah. So that's it for me, Ryan. Back over to you, mate.
Thank you very much. Right, everyone, enjoy yourselves later on with all that masses of data we're not getting. We're going to be stuck listening to headlines again and Fed speakers and whatnot, but enjoy the calm while we've got some, because when that shutdown does finish, all that data is going to come in floods, and then it's going to be a right old mess. Enjoy your days. Take care. We'll see you all tomorrow.